Hi, good morning. Welcome to Business. My name is Darrell Kwa. We've seen quite a shake-up in the financial sector this year, the latest being the collapse of several firms within the securities market. These firms are said to be holding 8 billion cedis of investor funds, and most, if not all customers, are worried about what the future holds. Although the regulator, the Securities and Exchange Commission, has assured funds are safe. Joining me in studio is Joy Business researcher Philip Namfori to make sense of all that is going on. 8 billion cedis of investor funds. That is very worrying, and we are hearing very worrying stories about affected customers who invested so much. What are some of the stories you are hearing?
Okay, Darrell. So I spoke to a number of people, some with financial literacy, a certain level of financial literacy, some without. And you realize that those without financial literacy, obviously they have no way of understanding how the financial system works. So classic case of putting all your eggs in one basket, where they don't diversify their portfolio. And by diversify, I mean you put one money in, for example, Darrow Securities, and any money you get, you pump all into Darrow Securities. You don't put in some in any other institution, so that just in case Darrow Securities falls, you have something to fall back on. Now, we had those with financial literacy who believe that these are the firms that they have known. Some have even worked in such firms, so they have the utmost trust in it. And this is what you say all the time. The financial system is built on trust. So a lady I spoke to says she's been working with them for years. That was where her salary was coming in through. This one I'm talking about is a savings and loans company. So she resigns, and that's where she pumps all her money into. But you can see that it replicates across all the financial spheres, whether savings and loans, as bank and specialized deposits, or fund management firms. So you see that at the core of this is financial literacy, and either the regulator or the practitioners or both must come together to ensure that we can build up.
And even those who are financial literates.
That one is greed. I know they're coming to. For those who are financial literate and still go ahead to do these things, it's pure greed. I don't think there's any way we can explain
How is it greed that I invest money in an investment firm?
You know that there's a chance, and you see, Darrow, investment is a risk. You put your money in Darrow Securities. You know that there's a high preponderance of Darrow Securities collapsing if one part of the industry falls. You still go ahead and put, because maybe Darrow Securities may be giving you a high level of returns. So you go and pump your money there. You can put money elsewhere to save yourself some problems, but you don't. That's where the greed comes in. For others, it's just the fact that you don't want to track too many investments. I know someone who doesn't want to track, so she's pumped all her money into one bank and one fund management company. Fortunately for her, these two are still standing.
You know, the question now is, so where do I invest my money? If I say with a bank, I'm not too sure how it's going to end up. Microfinance company, savings and loans company, now investment firms are going down. Where do I put my money now?
That's a difficult question. I heard someone saying that he's going to put his money under his pillow, under his bed and stuff like that. That will not work. You see, it's all about system of confidence and trust. I know that now things have gone bad. Sometimes, I personally, before the savings and loans started cleaning up, I had money somewhere. I went for it. And I am someone who has...
So why are you keeping it?
It's in my bank now. It's my bank now. So I took it out from there and put it in my bank, waiting to see what will happen. And I have even studied these things in school. So you see that sometimes it affects everyone. How are we going to bolster confidence? That's a very difficult question.
That was going to be my next question, because we are being told not to panic, because the regulator says that the funds are safe and they are secure. But I mean, generally, what does this do to us who want to invest in our money in certain institutions?
So
obviously, confidence is different.
First one, level of confidence drops. As a result, people don't place funds in these institutions. That has effects on financial depth, financial efficiency, financial inclusion, and overall, if not checked over a period of time, we have a high... It's high concentration. If not checked properly, we have problems with financial stability and the effect on economic growth and development. So we have a situation where we are all scared, we are all looking, but if we don't have confidence in these institutions, then things will go
and those are the repercussions we should be looking at. But how much of this is the fault of the Securities and Exchange Commission? Some have said they acted too slowly on this matter.
You see, Darrell, we've had this discussion when it came to the banking sector one. It's not over a period of one day. It's over a period of time. So we should be able to go back and track how far this spread. Even this guaranteed returns some of the fund managers were promising. It goes as far back as 2015. So what was going on then that we didn't check it and it spread like a cancer till now? It's easy to call for the head of the current management.
But who is being held accountable?
You see, one thing we need to note also is that the SEC Act itself places some limitations on them to act. Bank of Ghana laws give them much more power than the SEC. So policymakers need to also look at the SEC powers, give them more hands, because we're just talking to the Deputy Director General of the SEC, Paula Babio, and they have to go through a different process from what Bank of Ghana went through. Bank of Ghana can get up one morning and say, I'm appointing an advisor, etc. The SEC can't do that. So we need to look at the law also and give them more powers as a start. It's not a panacea, but it's a start. And let's see what can happen. Because, again, one thing we need to also look at is how these four institutions, pensions, capital markets, insurance, banking, how we need to start thinking about how they work together. I know we have the Financial Stability Council, but we need to start thinking about a regulatory model which will solve some of the arbitrage that is going on in the system, where one thing happens here and nobody's aware, and before they come, we need to start thinking about all that too.
And we need to look out because the insurance sector is next, it appears.
I won't say it's next. It's already happening. If you check the NIC's report, Darrow, a plethora of institutions are making losses over a course of 4 financial years. And we're not hearing anything from the NIC. So you ask yourself, what is going on? You understand? It's a lot.
All right, we've got to watch that space. Thank you very much, Philip Namfori, for that analysis on issues regarding the securities market. Now, before we go, as we talk about investment, local bank, Cal Bank, has successfully issued a $100 million bond bought by investors in New York. The facility, which is for a 12-year period, saw 14 lenders participating. According to the bank, it would be targeted at helping boost the SME sector. Executive Director of Cal Bank, Philip Oredu, addressing the media, talked about the bank's ability to manage risks.
It's a Cal paper which was put out into the markets in New York, and it's a paper which is guaranteed by OPIC. So basically a paper issued by Cal Bank, guaranteed by OPIC, bought by investors out there, and it's also a paper that they trade in. So that is basically what the paper is. We have a robust risk management process in place. Number one, we start with the treasury function, or let me start from the other side. We have the risk management committee of the board, which ensures that in terms of policies, in terms of practices, we have all that it takes to be able to manage the risks of the bank. And then we have the assets and liabilities management committee of the bank, which virtually on a weekly, monthly, quarterly basis looks at the various risks attendant to the balance sheet that we have. Then we have the treasury and the finance team, which on a daily basis do ensure that in terms of risk management, we have the risk management team also, which sort of plays an oversight over the operational activities of the treasury and the finance team in order to ensure that the policies and
And that's it for business for now.